Your homeowner's insurance won't cover the disasters you're prepping for. I'm going to show you the coverage gaps that leave 80% of preppers financially devastated, even when they survive physically. Welcome back to Bunker Down Survival. I'm here to talk about the preparedness angle most channels ignore: financial survival after disaster. You stored food, water, medical supplies. You have backup power. But have you actually read your insurance policies? Because I guarantee they don't cover what you think they cover. Today we're breaking down 5 insurance types, what they actually cover during disasters, and the critical gaps that bankrupt unprepared families. By the end, you'll know exactly which policies you need and which ones are wasting your money. Let's start with homeowner's insurance, the policy everyone has but nobody understands. Standard homeowners policies cover fire, wind damage, theft, and liability. Here's what they don't cover: floods, earthquakes, sinkholes, nuclear events, war, and government seizure. Hurricane Katrina taught us this lesson brutally. Thousands of homeowners discovered their wind damage from the hurricane was covered, but the flood damage, which did most of the destruction, was completely excluded. Insurance companies fought these claims for years. Here's what most preppers miss. Your homeowner's policy covers your structure, but your stuff, that food storage, those generators, all that survival gear, that's covered under personal property, usually at 50 to 70% of your dwelling coverage. And there are limits. Standard policies limit firearms to $2,500 total, jewelry and precious metals, $1,500, cash, $200. If you're storing silver or gold as prep currency, or you have a decent firearms collection, you're massively underinsured without additional riders. Solution? Scheduled personal property endorsements. List high-value items individually with photos and serial numbers. This typically adds $50 to $150 per year, but protects thousands in prep investments. Get replacement cost coverage, not actual cash value. The difference is huge. Flood insurance is separate. Always. Your homeowner's policy excludes it completely. The National Flood Insurance Program, NIFP, is the primary source. And here's what preppers need to know. First, there's a 30-day waiting period. You cannot buy flood insurance when the storm is forming. You need it in place before hurricane season, before spring flooding, before you need it. Second, it covers structure up to $250,000 and contents up to $100,000 separately. Average annual cost, $700, but rates vary wildly based on flood zone. If you're in a high-risk zone, you might pay $2,000 to $3,000 annually. Low-risk zones might be $400 to $500. Check FEMA's flood map tool. Your address will show your zone. Here's the catch. NIFP doesn't cover temporary living expenses. If flooding forces you out of your home for 3 months, you're paying rent plus your mortgage. No reimbursement. This bankrupts families even when the structure is covered. Some private insurers now offer flood policies with better coverage and additional living expenses included. Compare NIFP to private options annually. Rates have changed dramatically in recent years. Earthquake insurance is also separate. Standard homeowners policies exclude earth movement completely. Earthquakes, landslides, sinkholes, mud flows. If the ground moves, your basic policy doesn't pay. Why separate? Because earthquake risk is concentrated geographically and catastrophically expensive. One major quake could bankrupt an insurance company if everyone had automatic coverage. So it's optional and expensive. California earthquake insurance averages $800 to $3,000 annually, depending on location and construction type. Deductibles are brutal, typically 10 to 25% of dwelling coverage. On a $400,000 home, that's a $40,000 to $100,000 deductible before insurance pays a dime. Is it worth it? For high-risk zones, Bay Area, Los Angeles, Pacific Northwest, probably yes, if you can afford it. For low-risk areas, probably no. The cost-benefit math is brutal. Many Californians self-insure by building emergency funds instead. Alternative? Retrofit your home with seismic reinforcement. Bolting your house to its foundation costs $3,000 to $7,000 one time and dramatically reduces earthquake damage risk. 5 years of earthquake insurance premiums could pay for the retrofit that actually protects your home. Umbrella liability insurance is the prep policy nobody talks about, but it might be the most important for protecting everything you've built. Here's why. During disasters, liability risks explode. Someone slips on your property during evacuation. Your generator's exhaust fumes sicken a neighbor. Your stored fuel causes a fire that spreads. Your firearm discharges during a home defense scenario. These are million-dollar lawsuits waiting to happen. Standard homeowner's liability covers $100,000 to $500,000. Umbrella policies add $1 to $5 million for $200 to $400 annually. The math is incredible. $200 per year protects everything you own from a single lawsuit. Here's what preppers need to know. Umbrella policies exclude intentional acts but cover negligence. Accidentally shooting someone during home defense might be covered. Intentionally shooting an intruder is not. This legal distinction matters enormously. Every prepper with assets worth protecting needs umbrella coverage, period. If you own a home, have retirement savings, or have wages that could be garnished, you need $1 to $2 million minimum. The cost is trivial compared to the protection. Life insurance becomes critical during disasters. If you're the primary income earner and you die during a crisis, your family needs to survive financially while society rebuilds. Two types matter: term and whole life. Term is pure death benefit for a set period, 10, 20, 30 years. Whole life includes cash value that builds over time. For most preppers, term is the right choice. Example: 40-year-old male, healthy, non-smoker. $500,000 in 20-year term coverage, $30 to $40 per month. Same coverage in whole life, $400 to $500 per month. The difference is massive. Buy term and invest the difference. How much coverage? Standard rule, 10 to 12 times annual income. If you earn $75,000, target $750,000 to $900,000. This replaces your income for a decade while survivors rebuild. During disasters, this becomes your family's survival fund. Read the exclusions. Some policies exclude death during war or civil unrest, the exact scenarios preppers worry about. Accidental death policies often exclude deaths during disasters classified as acts of God. Know what you're buying. Health insurance is survival insurance during disasters. Medical emergencies are the #1 cause of bankruptcy in America, and disasters make medical crises inevitable. During extended disasters, your medications run out, chronic conditions worsen without treatment, injuries happen more frequently. Without insurance, a single ER visit costs $3,000 to $10,000. A broken bone requiring surgery, $25,000 to $50,000. Key terms: deductible, what you pay before insurance kicks in; out-of-pocket maximum, the most you pay annually; network restrictions, which doctors and hospitals are covered. During disasters, you might need out-of-network care. Understand those costs. Health savings accounts, HSAs, are prep gold. If you have a high-deductible health plan, you can contribute pre-tax money to an HSA. That money rolls over year to year and can be invested. It's a triple tax advantage: deductible contribution, tax-free growth, tax-free withdrawal for medical expenses. Fund your HSA to the maximum allowed, $4,150 to $8,300 family for 2025. Think of this as your medical emergency fund. During a disaster, when insurance networks collapse, you'll have cash reserves specifically for healthcare. Now let's talk about what no insurance covers, the gaps that leave even insured families vulnerable during disasters. Nuclear events, completely excluded from all standard policies. War and civil unrest, excluded. Government seizure or nationalization of property, excluded.
Power outage lasting more than 72 hours, often excluded for food spoilage claims. Hurricane example. Your insurance covers wind damage to your roof. That roof damage lets in rain and ruins your food storage. The roof is covered, but spoiled food isn't. That's a separate claim with strict limits, typically $500 to $1,000 maximum. If you run a home-based business or side income, your homeowner's policy excludes business equipment and liability completely. That ham radio you use for both prep communications and amateur radio club activities. If it's ever used commercially, it might not be covered.
The solution isn't more insurance, it's self-insurance through emergency funds. Insurance covers catastrophic losses. Emergency funds cover everything else: deductibles, exclusions, temporary housing, income loss during recovery. The best insurance in the world won't help if you can't prove what you lost. Documentation is the difference between full recovery and financial devastation. Here's your action plan. Walk through your home with your phone. Video every room, opening closets and drawers. Narrate as you go. Sony 65-inch TV, purchased 2022, $1,200. Compound bow, Bear Archery, purchased 2020, $800. Show serial numbers on electronics and firearms. Upload this video to cloud storage, Google Drive, Dropbox, somewhere off-site. If your house burns down with all your records, you need documentation accessible from anywhere. Update annually or when you make major purchases. Keep copies of all insurance policy declarations pages, the summary of coverage amounts and deductibles. Store these off-site. Safe deposit box, trusted family member's house, fireproof safe. You can't file claims if you don't know what coverage you have. Serial numbers are critical for high-value items: firearms, generators, power tools, electronics. Create a spreadsheet with make, model, serial number, purchase date, and receipt photos. This document is worth thousands in disputed claims. Let's talk numbers. What does proper insurance coverage actually cost annually? Homeowners, $1,200 to $2,000. Flood, $700 if needed. Earthquake, $800 to $3,000 if high-risk zone. Umbrella liability, $300. Term life, $480. That's $40 per month. Health, $6,000 to $12,000 depending on plan. Total, $9,000 to $18,000 annually for comprehensive protection. That sounds expensive until you realize one uninsured disaster costs $50,000 to $500,000 to recover from. Hurricane damage, $75,000 average. House fire, $65,000 average. Major medical event, $100,000 plus. Losing everything, priceless. If full coverage is unaffordable, prioritize. Health and life insurance first. These protect against personal catastrophe. Homeowners and auto second, legally required and high-frequency claims. Flood and earthquake third, if you're in risk zones. Umbrella fourth, if you have significant assets. Ways to reduce costs. Bundle policies with one company, 10 to 25% discount. Increase deductibles, accept more risk, pay lower premiums. Security systems and monitoring, 5 to 20% discount on homeowners. Loyalty discounts, staying with insurers long-term saves money. Here's uncomfortable truth. Insurance companies exist to make a profit. They collect premiums and pay out less in claims. Your job is to know exactly what you bought and hold them accountable. When filing claims, document everything before cleanup. Take hundreds of photos. Get multiple repair estimates. Don't sign releases until fully satisfied. Insurance companies often lowball initial offers. Negotiation is expected and normal. For major claims over $50,000, consider hiring a public adjuster. They work for you, not the insurance company, and typically get 10 to 20% larger settlements. Their fee is 10 to 15% of the claim, but the net recovery is usually better. Read your actual policies, not just the declarations page, the entire policy. I know it's 50 pages of legal language, but that's where exclusions hide. You can't fight for coverage you don't understand you have. Insurance regulation varies wildly by state. Some states mandate certain coverages. Others allow insurance companies to exclude almost anything. Your state matters enormously. Florida, Citizens Property Insurance is state-backed insurer of last resort. Expensive, but available when private insurers withdraw. California, Earthquake Insurance through CEA, state program with specific rules. Texas, Wind and Hail are separate from homeowners policies in coastal areas. Check your state's insurance commissioner website. They publish consumer guides explaining required coverages, common exclusions, and complaint records for insurance companies. This is public information designed to protect consumers. Here's your 30-day insurance action plan. This month, you're going to close every coverage gap that leaves you vulnerable. Week 1. Pull out all existing policies. Read every declarations page. Create a spreadsheet listing policy type, company, coverage amounts, deductibles, exclusions, annual cost, and renewal date. Week 2. Identify gaps. No flood coverage in flood zone? Inadequate liability protection? No umbrella policy? Life insurance too low? Write down every gap you discover. Week 3. Get quotes. Contact multiple insurers for missing coverages. Compare prices, deductibles, and coverage limits. Independent insurance agents can quote multiple companies simultaneously. Use them. Week 4. Make decisions and purchase needed coverage. Document everything. Create your home inventory video. Upload documentation to cloud storage. Update your emergency binder with new policy information. Set a calendar reminder for annual review. Insurance needs change as assets grow, families change, and policies renew. Make this an annual ritual every January. Review, update, optimize. Physical preparedness keeps you alive during disasters. Financial preparedness keeps you alive after disasters end. Insurance is the bridge between survival and recovery. Most preppers focus entirely on beans, bullets, and Band-Aids. But I've watched financially unprepared families lose everything after surviving physically. Don't let that be your family. Drop a comment. What's your biggest insurance gap? What coverage are you missing? Share your experiences filing disaster claims, good or bad. This community learns from shared experience. If this opened your eyes to insurance apps, subscribe to Bunker Down Survival for weekly preparedness intel that covers what other channels ignore. Remember, prepared minds survive. Stay covered, stay secure.